The banking contagion around the world is causing shockwaves. ANZ CEO, banking turmoil has the potential to trigger the next financial crisis. But in some good news, First Citizens Bank to buy Silicon Valley Bank's deposits and loans from the FDIC. If there is systemic risk in the banking system, and that's the global banking system, we're going to see all banks, no matter where they are, suffer problems. US bank failures pose risk to global growth. All around the world, people are asking the question, what caused this? Why is this happening? It's happening because of the federal funds rate in the US being raised so dramatically, or should I say traumatically. The US federal funds rate has been exploding. We don't typically get recessions until the Fed starts to reduce its rates, as we saw with the GFC. But you can see this financial conditions risk, it's starting to take off. It's early days yet when we compare it back to the GFC. The key question, we see the US central bank balance sheet just starting to spike up. Is this enough to stop banking problems? And we saw it basically spiking up, but that didn't stop the S&P 500 and a lot of other asset classes coming down. When looking at systemic risk, we must draw a wider picture. What are the other central bank balance sheets looking like? We can see the US just starting to spike up, and you can see Japan has been under stress for quite a while. When we look at the European Union, the Euro area, we can see they're not spiking up just now, but Switzerland has just started. And if you look at China's central bank balance sheet, it's a roller coaster. One thing that I have noted with China's central bank balance sheet, it typically spikes around short-term highs or short-term lows. This may be something to keep in mind. One thing to cause a little bit of concern when we look at inverse credit risk, and this is LV28 from the Masterclass, we can see that inverse credit risk has actually broken down below its support. The last time we saw this was not at a good time. Let me pop the recessionary indicator on that I share inside the Masterclass. We can see a similar thing happen just before a recessionary period, and that was in 2020. If we go back to the GFC, we can see inverse credit risk was coming down, starting to put pressure on the main markets. It was a forward indicator. As professionals, we look really widely. We have to take in data sources from so many areas to understand what financial markets are actually doing. As interest rates come up, the costs of borrowing also come up. This can create unrealized losses on selective securities. You can see here in this particular chart, across all banks, look at these absolute incredible unrealized losses. There were unrealized gains up to about 2021, and then the tides turned. Why did they turn? Because the Fed went bananas. It raised interest rates at a pace not seen previously to control out of control inflation. At the end of 2022, there were $368 billion worth of unrealized losses on mortgage-backed securities. The title of this video is 8 trillion reasons. Why did I use that? Because there's 8 trillion reasons why we need to be concerned about the banking system. And this is just in the US. Just add up all the other countries and you're going to come to a lot more than $8 trillion. 8 trillion, what am I talking about? I'm talking about the gap in insured and uninsured bank deposits. 8,000 billion US dollars is uninsured. When we look over time, you can see the gap between insured bank deposits and uninsured bank deposits. They're currently sitting at $8 trillion inside the US economy. And that's not all. We've got uninsured bank deposits like that all around the world. Let's get really specific. What happens if the banks failed? That will mean $8 trillion will evaporate because it's uninsured. What does this actually mean to you? If you've got substantial bank account deposits and they're uninsured because they're over a specified governmental limit, you need to do something with those funds. The question is, what can you do? We recently saw AT1 bonds be written down to $0. Putting your money in bonds may not necessarily cut it. Of course, government bonds are supposedly backed by the government, but what if the government goes under? Who backs the government? Which only really leaves a couple of options, gold and Bitcoin. Why didn't I say crypto? Why did I just say Bitcoin? I'm not a Bitcoin maximalist. There are currently 23,051 cryptos. Look at that, 23,051 at a combined market capitalization of $1.16 trillion. It's a reasonably sized market, with Bitcoin accounting for 46.5% of that value. Government agencies have to stop money leaving the banking system. How do they actually do this? They make alternate investment vehicles just so hard or difficult to touch. Gary Gensler, the chairman of the Securities Exchange Commission, the SEC, is going hard on crypto, but he's doing that for a reason. He's trying to protect the banking system. He doesn't want $8 trillion to leave the US banking system and go into crypto, because it will literally go into crypto, not just Bitcoin. But Bitcoin has been stated by the SEC as not being a security. High net worth individuals will pick Bitcoin over alts. Economists from the University of Southern Carolina, Northwestern University, Columbia University, and Stanford University said nearly 200 banks would be a risk of failure if half of the uninsured depositors pulled their money from the banking system. Why are they looking at this? Because it's real. They need to look at it. That's why we've seen so many headlines, anti-crypto headlines. Do Kwon arrested. Coinbase ex-manager convicted of insider trading. Coinbase getting sued by the SEC. The list goes on and on. Why is this happening? Because the SEC must stop money flowing out of the banking system. It's pointing towards crypto as being run by criminals. And of course, that doesn't happen in main markets. There is no fraud in the stock market. And of course, the SEC has been governing the stock market for nearly 100 years. Even so, bank failures are happening. Thousands of retirees can't withdraw savings invested in firms controlled by indicted financier Greg Lindenberg. Accounts worth $2.2 billion are frozen while legal battles rage. Where there's people, there will always be fraud because people chase after money instead of chasing after meaning. Whilst the US tries to save its own banking system by shutting down crypto on-ramps and off-ramps, Chinese banks caught crypto firms in Hong Kong after a mainland ban. Bitcoin escapes the SEC's jurisdiction, and it has a max supply of 21 million. Algorithmically, software-wise, there can never be more or less than 21 million total maximum supply. By definition, because it's a fixed supply and it's limited, people will start to fight over it when it becomes much, much more mainstream. That could take years, but it's going to happen. A lot of people say, well, just can't you copy the code because it's all open source anyway and just create another Bitcoin? Of course you can. It's called Bitcoin Cash and it's not really going anywhere. It's taken years and years and years for Bitcoin to gain widespread mass adoption. And it's just at its early phase, just like AI is now. We're going to see massive development around the artificial intelligence space. Just in today, Breesite AI soared 176% in Abu Dhabi debut after a near $500 million IPO. There are also many AI projects living on the blockchain. The key to remember, we're at a very, very important inflection point at the S&P 500's price action. If we fail to hold the 3878 level, the markets are in trouble. But if we continue up from here, it's looking quite good, but we'll have to manage our expectations each and every day. This is very, very choppy and turbulent times. One way you can understand potentially what the S&P 500 is doing is to look at Bitcoin. You can see I have the weekend indicator on here. That's that shaded area, Saturday and Sunday. We can see that the S&P 500 indeed did raise up, and that pushed momentum into Bitcoin. We're seeing the S&P 500 futures actually just go a little bit negative at the moment. One thing that I would like to share with you, high net worth individuals have, of course, a lot of money. Diversification is part of every high net worth individual's portfolio. Crypto, and especially Bitcoin, for those people is on the cards. Don't forget, people have 8 trillion reasons, just in the US alone, to consider putting their money into Bitcoin. And of course, it's not just going to all go into Bitcoin, it's going to go into the major alts, because a lot of people are very unsure of this thing called crypto. And why are they unsure? Because they listen to the regulators, who've never done their jobs properly in the first place. If they had, we wouldn't have GFCs, we wouldn't have the bank runs that we have now, we wouldn't have fraud. We could therefore suggest that whatever the regulators are actually doing is not working, based on the actual outcomes and results that we see. If just 10% of that $8 trillion, that's $800 billion, piled into Bitcoin, you can see that the entire crypto market would go up quite substantially. And that's just from American uninsured deposits. Remember, if there's a bank run or bank collapse, uninsured means you've lost your money. We're going to be keeping a very close eye on Bitcoin and gold throughout this period. And of course, all the underpinning levers of the banking system. From an inverse S&P 500 perspective, it looks like gold may be starting to get a little bit of steam under it. Remember that these are just indicators. You must understand what you're doing. We look extensively at intercorrelation and interconnection between financial instruments inside the Masterclass. Gold is currently trading at $1,970.61. But what do we actually see here? At the present time, there is a good directional association between the inverse of the S&P 500 and gold. These directional associations can phase in and out of association. You must bear that in mind. And they're not predictive in the sense that you can say, okay, the inverse S&P 500 is going up, therefore gold must go up. There are no musts in financial markets. It just doesn't work that way. It's a stacked probability. One of the things that we can see when we mark up the chart through the CTKS method, we're actually at a level of structural support. That's good. That's where we want to be in terms of gold's price action. If gold does spark up, we have the next level of resistance between 1978 and 1981. The next level of market structure resistance is between 1998 and 2000. This objective dynamic market structure, or ODMS, has been drawn up on gold since 1883. These are smart money buy and sell levels. We always do three-dimensional decision making, so from between 1952 to 1959, there's a great deal of support in gold's price. When you see a chart of Bitcoin, I'd like you to think of 8 trillion reasons why people will be interested in Bitcoin and crypto as well as gold. And of course, government bonds. One thing to bear in mind, Bitcoin is currently under resistance from 27,843 to 28,379. Bitcoin is currently 27,820. The next level of support is around 26,621. And we have further support below that at around 25,886. Back in 1993, I started an Internet Service Provider, or ISP. That was the time when the Internet was just at the dawn of making its way onto a browser. A lot of people do not understand that crypto is the next evolution of the Internet, from Web 2.0 to Web 3.0, the Internet of Money. Governments went all out to kill the Internet back in 1993. Fortunately, they failed. Can you imagine a day without the Internet right now? I can't. I wonder, can you? Please let me know in the comments. Remember that just in the US alone, there are $8 trillion worth of bank deposits that are uninsured. If a fully fledged banking crisis just flares out, high net worth individuals and just everybody in between will be looking for a safe haven. If you're faced with 100% loss immediately because your bank turns to fire, or you're thinking about this crypto sounds really risky, but Bitcoin is the least risky. It's passed the acid test from the SEC. So maybe putting some money in there, considering it has a 21 million fixed supply, makes sense. And then while you're at it, why not look at all the other options, the alts, such as Ethereum, Cardano, XRP, Doge, Matic, and there's so many others. But bear in mind, the more that you go outside the top 100, the more probability you have of suffering deep financial losses just because of the volatility of a variety of different projects. There's 21,000 alts out there, and I wouldn't touch 95% of them. High net worth individuals don't take news headlines that seriously. They actually create news. And they also look deeper into news headlines and say who is driving this particular action, and more importantly, why. The average citizen will just lap up whatever the news tells it to lap up. But we are very, very different. We have critical thinking. And we also know the more negative the news is, the more likely smart money is putting their money in, not taking it away or out. Just watch the footprints of smart money. NASDAQ eyes crypto custody launch by the end of the second quarter, whilst the SEC is coming for Coinbase. Doesn't Coinbase compete with NASDAQ? Oh, interesting question. Please let me know your thoughts in the comments. If crypto was so incredibly dangerous, why would MasterCard on its website talk about scaling and securing the crypto ecosystem together? And it also talks about grow revenue by enabling consumers to easily use their crypto. This doesn't sound like a dangerous market. And what about National Australia Bank completing the world first cross-border stable coin transaction using the National Australia Bank issued stable coin, which is a world first by a major financial institution, and it did so on a layer 1 public blockchain. Keep on coming back to the idea, 8 trillion reasons. It's a really sobering thought. In other news just out recently, Fujitsu interested in crypto trading services, a trademark application reveals. In other news, Sony Interactive eyes non-fungible token or NFT transfers across multiple game platforms, reveals a patent. GameFi is a huge industry, just in the conventional sense, and of course it's very much online as well. So integrating crypto NFTs is a very easy thing to do. One thing that we do as traders, we look ahead and we're very early. Why is that? Because we need to be. When we look at financial conditions risk down here, it doesn't look too bad compared to the GFC, does it? But when you look at 2020, it's getting there. It's about half that. Just bear this in mind. I hope this video has given a little bit of an insight into flights to safe havens. There's a few of them, and we're going to keep our eyes on them. One of them is definitely Bitcoin and definitely crypto. If this particular asset class hasn't been on your radar, you should look into it more deeply. Don't just blindly accept what the news tells you. Dig a little bit deeper and see why they're saying what they say. And you can look at a wide variety of news articles actually showing that banks, traditional banking systems, are trying to get into the crypto space. Something that you also might like to keep in mind as far as the exchanges go, just in the last 24 hours, Binance did $43.6 billion worth of volume. Have a fantastic day or night ahead, my friends, and Kate and I look forward to catching up with you tomorrow. Bye for now.